silver ended a great week and a great month, up over $3 an ounce, new all-time record high. We're trading above 56.30. I think I just saw it trade above 56.40.
It's now breaking out, meaning that the money flow that we've seen coming out of doubters in the stock market, some large skeptical asset managers, let's assume, it's helped gold go up. But when you break that spread out, and you're doing it this month, we're at levels now that are incredibly above that breakout point. It says, hey, it's just beginning.
The UAE, United Arab Emirates, and China conducted another successful test of mbridge, a real-time test. For those people that don't remember, mbridge is the cross-border payment system that was designed by China, Hong Kong, Thailand, UAE, and, of course, the fifth full participant who came in a little bit later, Saudi Arabia. They're the big five, originally designed with the assistance of the BIS Innovation Hub.
Silver just closed out a massive week and a historic month, surging over $3 an ounce and breaking into new all-time highs above $56, even briefly touching the $65 range. The breakout is unmistakable. Money is flowing out of a shaky stock market and into precious metals as large asset managers finally capitulate and take silver seriously. The long-watched gold-silver spread has now blown wide open, confirming that this move is only getting started. At the same time, major geopolitical shifts continue accelerating. The UAE and China successfully completed another live test of mbridge, the cross-border payment system built by China, Hong Kong, Thailand, the UAE, and now Saudi Arabia, designed to move real value outside of the US dollar system. This is exactly the type of structural shift Andy Schectman has warned about for years. Gold had its own strong day, jumping $60 to $65 toward the $4,220 area, likely closing the month at a fresh monthly high. But the true star is silver. 6% up today, 13% up this week, 12 to 16% up in November, and 95% up year-to-date. Peter Schiff emphasizes this is the silver breakout he has been forecasting, silver waking from its long slumber and finally outperforming gold by roughly 50% YTD. For Schiff, this confirms a powerful new phase of the bull market because historically the strongest precious metal rallies occur when silver leads the charge. He believes silver is still cheap even after this run and could reach $100 next year, while gold may climb above $5,000. With silver now dragging gold higher, reversing years of lagging performance, Schiff, Schectman, and Oliver all see this as the start of a much stronger, more explosive leg of the precious metals bull market.
Not too shabby either, up better than $60. I think I just saw it up $65, trading at $4,220. It's not a new record high, but it's getting close, probably on a monthly basis, because this is the last day of November. And on a monthly basis, it probably is a new high for the month. In fact, it may even be a new high for the week. I'm pretty sure that it is. In fact, looking at how the precious metals have performed, silver up 6% today, which is, startling by itself, but it's up 13% on the week, 16.5% during the month of November. What a November to remember. But I think we may get an even more memorable December, because I think we're going to get a big follow through. Year to date, silver is now up 95%. Think about that. And the year isn't even over. We still have another month. So I think we're going to end up with a double in the price of silver in 2025. Gold up about 1.3% today. On the month, up more than 6%. And on the year, still up better than 60%. But silver is now outperforming gold year to date by about 50%. Now, this is something I have long been forecasting on my podcast and on these weekly market wraps. I've been saying that silver would eventually wake up from its slumber and take the lead and outperform gold. And that is exactly what it's doing. That's why I've been so bullish on silver, and I've been recommending that all of the Schiff Gold customers buy silver too, not just gold. In fact, I've been recommending more silver than gold this year for the specific reason that silver was so cheap and you had a long way to go to catch up. Now, it's still cheap, clearly not as cheap as it was, but I think we have tremendous upside potential. I think silver could trade $100 an ounce by next year. I don't expect gold to make that large a percentage move, although I do expect gold to be above 5,000 next year. So both metals should still be purchased, but I still think that even with this move, you still want to make sure and be buying some silver along with your gold. And the fact that silver is now leading gold higher, this is very bullish. This means that the precious metals bull market is much stronger, because in the past, gold was leading silver. In fact, it was dragging silver, almost kicking and screaming like it didn't even want to go up. And that was one of the negative divergences in the precious metal space. People would be doubting the gold market because they weren't getting the confirmation from silver. Well, now we've got that and then some. We've got silver even stronger than gold. That's what you want. This new leg of the precious metals bull, which is being led by silver, is going to be even stronger. So gold is going to make even bigger gains now following silver than it did when it was leading silver.
This enables mbridge members to convert trade surpluses, as we've talked about, directly into gold, and this bypasses the dollar entirely. This is the ultimate plan with the Shanghai Metals Exchange expansion of their vaulting system, the one that was just completed in Hong Kong. What's the significance of that? In order to take gold out of China, it has to come out of Hong Kong. So the first one was built in Hong Kong. So in an example like this, the UAE could sell oil, as an example, to China for the digitally won over mbridge, which settles in 7 seconds, 98% reduction in fees, no U.S. or Western intermediary banks, no SWIFT. And then they can settle imbalances in gold first without converting into dollars and take possession in Hong Kong. And of course, the second vault is under construction, or will be very shortly, in Saudi Arabia. This is where it is heading, and I think that's a important piece. A couple other things that I noticed, UBS, and again, these banks are so full of BS at UBS. They're all full of it because they continue to raise their price targets. And their price targets are as useful as a mud wall, because they've been wrong continuously, yet, okay, fine, and they acquiesce and raise it. So now UBS says, well, we're going to raise our mid-year price target to 4,500, previously 4,200. Well, geez, thanks. I think that these banks that continue to raise their targets, if you go back and look what they were a year or two ago, it's almost kind of laughable. A lot of people will talk about it. I don't even think it really bears much consideration at all. They really don't want people to know what their real belief is, and that's why you have, it's funny because I have an account with Morgan Stanley, and the guy that I work with, he's a very good friend of mine, and he manages, a lot of money with Morgan Stanley. He's one of the biggest in Florida, and he lives in my neighborhood, and he wouldn't know a gold coin if it fell on his foot, yet his chief investment officer has advocated for 20% holdings in gold, sell half your bonds. And so, it's to me, these banks and the people who work underneath them really have no clue. But when you're getting Michael Hartnett, when you're getting, again, another comment from Jeffrey Gundlach, the bond king, saying that 25% gold is not overweight. And then, of course, Michael Hartnett, as we've talked about, he's the chief analyst of Bank of America. They're talking to people above, not the successful money managers who are managing $3 billion and are at the top of their game on retail. They're talking to the people who are bringing in all the metal into the United States. They're talking to the massive traders that are doing so. And they're saying gold and silver are being, in essence, by their actions, reintegrated into the system. To me, that caught my attention. So don't pay attention to what they're saying. Pay attention to what they're doing.
The conversation highlights a major structural shift underway in global finance, driven by the rapid expansion of gold settlement infrastructure outside the U.S. dollar system. The mbridge network now allows member nations to settle trade surpluses directly in gold, completely bypassing the dollar, SWIFT, and Western intermediaries. With China's newly expanded Hong Kong vault and a second vault being built in Saudi Arabia, countries like the UAE can sell oil to China, receive payment in digital ECNY, settled in 7 seconds with 98% lower fees, and convert the surplus directly into physical gold held or withdrawn in Hong Kong. This is the blueprint for a gold-backed trade ecosystem emerging in Asia and the Middle East. Schectman argues that Western banks clearly understand what is happening, even if they refuse to say it publicly. Institutions like UBS keep raising their gold price targets, although they've been consistently wrong and late. Meanwhile, the real signals come from insiders. Top analysts like Jeff Gundlach and Michael Hartnett recommending 20 to 25% allocations to gold. These banks may publicly downplay gold, but behind the scenes they are advising the largest clients, sovereign entities, major metal importers, and top-tier traders to accumulate aggressively. Their actions, not their public commentary, show that gold and silver are being quietly reintegrated into the global monetary system. Oliver then explains why most analysts completely misunderstand gold's current move. They only look at price charts. When you plot a relative performance spread, gold versus the S&P 500, a very different picture emerges. For more than a decade, gold has built a massive multi-year base. Since early 2024, that spread has surged higher and has now broken out above the entire 11-year range, signaling a major rotation of capital out of equities and into monetary metals. If you remove the labels, the chart looks like a classic bullish breakout in any asset class. This shows that gold's move is not overextended. It is just beginning. The asset reallocation into gold and silver is structurally underway, and the relative performance breakout confirms that a major monetary shift is unfolding beneath the surface.
Charts that we're looking at, neither one of them are simple price charts, which everybody is deluded by one way or the other. That's why there's a chorus of folks still calling every time the gold flinches, it's got to correct, et cetera, or it's the top. There is a relationship between gold and the S&P 500 or the U.S. stock market bubble, and you can plot it. It's called a spread relationship. We simply divide the front month of active contract of gold futures into the price of the S&P and express that as a percent. And we plot it, okay? Every end of every month, we plot one little dot, okay? When you plot that chart, we've shown it in prior reports, you've got a 11-year wide base on that chart, where gold back in 2011 was at a higher relative level to the S&P. And during its bear market, 2011 through, especially 2013 through 15, gold dropped, but also its relative performance dropped to the S&P. But then actually since 2014-15, you could basically take that same spread chart, draw a line sideways, and gold's been above and below and above and below. It's really been par to the S&P. Depends on when you bought gold relative to the S&P, you're doing better. Now, especially since 2024, that spread has moved up sharply. Now, when you look at the spread chart, there is a massive, very clear line across every single rally high that relative performance surges have created. So you could take a crayon and have a 5-year-old draw the line for you. Unfortunately, most people don't plot the spread chart. And if you did, you would see that this month's close, we have a half a day trading left, I think on Friday, is out above that base. Meaning that while gold has handily beat the S&P, especially since 2024, coming up from the lower end of that base, it's now punched out above it. So if you were just looking at that chart, and I erased the words gold versus S&P and didn't tell you what it was, and you thought, well, that's a price chart of some stock, you'd say, I got to buy that thing. okay? Because you break it out of a base that an idiot could see. But everybody thinks that gold has gone too far, it's got to correct, or it's excessive. And that's because they're focused on what? A simplistic price chart. And when you run a relative performance chart, it's saying not only has money been moving into gold since 2024 soundly, solidly, it's now breaking out, meaning that the money flow that we've seen coming out of doubters in the stock market, some large skeptical asset managers, let's assume, who've said, hey, I need a little bit more in that monetary metal sector. Okay, and they've been, a little bit here and there. It's helped gold go up. But when you break that spread out, and you're doing it this month, we're at levels now that are credibly above that breakout point. It says, hey, it's just beginning. This relative performance asset shift out of the stock market into monetary metals is only now beginning. So those folks who've been tell you that, this has gone too far, too long, et cetera, they need to look at that chart because it says something totally different.
All right, that wraps up today's breakdown. If this helped you understand the massive global shift happening behind the scenes, from gold-backed settlement systems to the breakout we're seeing in the charts, make sure you hit that like button so more people can find this information. Subscribe if you haven't already, because we're tracking every major move in gold, silver, and the monetary system that the mainstream still isn't talking about. Drop your thoughts in the comments. Do you think this transition away from the dollar is accelerating faster than most expect? I'd love to hear your take. Thanks for watching, stay informed, and I'll see you in the next one.